put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobosz. Well, first, let's lead off with a little bit of an impromptu geography lesson. The world according to Americans. One of those things you get on your Facebook posts, you know. America, we're number one. More America for Hawaii. Laundry and lawns. Coffee comes from here, I think. Begins with P, it's a derogative term. Communists, evildoers, they make our stuff. Zoo animals come from here. Santa. Well, you know, Americans really haven't had to look far for profit historically. Of course, in the past decade, it's been much harsher. Little aside here, the world according to, the USA according to New Yorkers. Look how big New York City is here. Bigger than Pennsylvania. Yuck. Jersey, I guess. West Virginia, stay out. This might be Nebraska. Sorry, no. Alabama and or Mississippi. And then Florida, where they shot cops. A lot of episodes do come from Florida, and Texas too, to be quite honest with you. Well, anyway, the market is in rip and grip mode. Take out your drivers and go long, boys, because shirtless John Daly here is telling you to fire up a cig and get on the tee. Steel is a sector that's surging. We're having a lot of economically sensitive stocks go up. Copper, of course, is not one of those, but let's talk about steel and coal. Steel, here we have the SLX, it's the Market Vector Steel ETF. It was down at 40 bucks, now near 47.53. We're talking about a 20% gain in just 6 days. Nice performance there in the SLX. What individual stock would you want to get? Maybe, well, something with yield perhaps. Nucor down in Charlotte, North Carolina, the pioneers of the mini mill concept, taking recycled car doors, pieces of scrap iron and steel, and putting them into an electric arc furnace to make new steel instead of the integrated methods of United States Steel. They're up from 30 bucks to 34.60. Nucor, kind of like the market, still in that trading range, but above its 50 and its 10-day moving averages, looking like some kind of a virtuous cross happening with the 10-day and the 50 if we get a couple more up days in Nucor. Another steel company, as tasty as a good Korean barbecue, which we do have around 32nd Street and Broadway here in the city. POSCO, they came to my attention a few years ago. Warren Buffett had it appealed to Buffett's strategy. I wrote a column about it. Anyway, 70 bucks to 82 in just 6 days. Nice little pop for POSCO. On to coal. Coal is alive and kicking, to quote the Simple Minds. We have coal, the KOL ETF, easy to remember, 29 bucks up to 34 in just 6 days. This thing holds coal mining stocks and trusts, and this is an MLP, ARLP, Alliance Resource Partners. 60 bucks to 67. The thing still kicks out a 5.6% yield. I did buy it on the downside at 64 bucks. I'm up a couple bucks. Yahoo. Arch Coal. Arch Coal has a nice little run here. Good bounce off the bottom. Arch Coal, 13 bucks to 16.59. ACI, you're talking about a PE of 17. Sales were growing at 29%. Back home, 2.9% yield, may I add. Back home, we call that a cheap stock because the PEG ratio is less than 1. Now let's talk about the size of stocks, small, medium, and large. SPY, IWM is the small, and the MDY, the S&P 400 mid-cap index. Here you have, from January of 99, we're talking before the dot-com crash, to the present time. Small and mids win it, up 100%, 70% for the small caps. And look at that, your S&P 500 index fund, the SPY, less than a 10% gain over a freaking 12-year period. That is poor. So, you know what though? You have classic behavior with small caps, just beating the crap out of large caps when you have strongly trending up markets, as you had from John Lennon's birthday in 2002, October 9, until the top of the bull market that ran in the middle of the 2000s, topped out October 9th, 2007. You had 170% gain in the small caps, mid caps from the middle. Point being here, there's volatility involved with small and mids, but over the long period, if you stay in those, you're going to outperform the SPY. Look at this, 80%, they're kind of converging now after a 2-year period here. This is from the bear market bottom, March 9, 2009. But now may be a great time to get small and mid caps, MDY and IWM. Last year, of course, it's all been living larger and safer, and the bigger your dividend was, the less your stock fell, so the defensive characteristics won out. But I say small and mid will win the day as they have in the past. Here you have the IWM, the iShares that hold the Russell 2000 index from 60 to 68 in just 5 days. Nice recovery there. Here you have the MDY up from 135 to 150 in a week's time. SPY bouncing, but it's still in that range, dancing on the ceiling, as we said. Lionel Richie would have put it that way. Con Felipe se demonia. Oh, jambalaya. Well, boss, we still have problems, but yes, we have solutions in Europe. And also, want to point out one thing. We have excessive levels of pessimism. The Bulls and Bears and the American Association of Individual Investors, Investors Intelligence, lopsided bearish sentiment. And what does that do? That puts people on the sidelines that later come in and say, yeah, I'll buy stocks now. So think of that bear as dry powder. A lot of bearishness out there. Plus we have the kissing cousins in Europe. And we are going to be smoking on to higher highs in stocks before it's all over, folks. Google, we have some earnings, of course. Alcoa kicked it off on Thursday, JP Morgan and Google. Google, what can you expect? Well, heck, who knows? But look at the stock. Nice little run from 480 to 543. 15 times was what Google sells for. 15 times 2011 earnings per share. Sales are growing 32% in the most recent quarter. EPS were up 36%. Google strikes me as exceedingly cheap here with a PEG ratio of about 0.55. JP Morgan, I don't know how they compute their earnings, but in any case, it's at 6.9 times 2011 expected earnings, which the revenues grew 15%. JP Morgan paying a 3.3% yield, and the stock's back above 30 bucks, yo. Go with Jamie, get a little JP Morgan. Dick Bove, I'm sorry. I heard him on Bloomberg just crowing about Bank of America. It's trading below book value, and book value is other than cash. Well, Dick, you know, maybe you have a point there. BAC's bounced from 5.5 to 645. Buffett's in it. Dick Bove from Tampa, Florida, actually Lutz, where Dusty Rhodes is from. Virgil Runnels, that's right, folks. One more thing, these protesters on Wall Street, the 99 percenters, I guess I'm one of those. But in any case, I want to point out one thing, that sales in small businesses, we got this from a company called Sageworks. They did some number crunching. Sales for small companies, private companies, grew 5.9% in the past year. Profits, obviously, on Wall Street are growing faster. 14.9% is what profits are supposed to grow in the S&P 500. And profit margins at small companies at a 10-year high, 6.52%. Things aren't all bad out there, folks. Look for the bright side and buy some stocks.